Hello and welcome to the stock specific class here for Thursday, April the 15th. Well, the market continues to just kind of grind higher. Yesterday, it looked like it was possibly reversing. We had higher volume come in on a kind of a bearish reversal type day. The VIX had a little bit of a bullish reversal, which is often a signal that things could start to sell off. But then today we've roared right back again. So the market just continues to grind higher, and so you have to recognize that. That may be that we just kind of continue to do that. We do recognize that we are having a little bit of these overbought conditions. Although with that little bit of a pullback yesterday, we've seen some of the overbought conditions alleviate just a little bit. But we need to still recognize that we're close to that overbought state, because it still means that we could get a bigger pullback at any time, but it also could mean we could grind a little bit higher. And so we're kind of in this limbo state. We'll take a look at the charts here in just a second. I can show you. So, and again, this is what I don't like these type of market conditions, because there's just too much uncertainty. It's not that you can't trade them. It's that it's risky to go long and it's risky to go short. The risk is too high in both directions. And so, like I said, a lot of times in these types of conditions, I tend to kind of sit tight, not do anything, and that's hard to do. But I think if you've had trouble doing that in the past, it's a good time to practice that, where you kind of force yourself to kind of trade less, be a little bit more patient, wait. Because that's definitely a skill that you're going to have to develop at some point in your trading career. The most money I've ever lost throughout my years of trading have been during periods of kind of uncertainty, just like this, where you should be kind of sitting tight and doing nothing, but you end up doing more, and sometimes you end up getting into too many positions, and then you get burned, and then you spend the frustrating part of that is then you spend the next 6 months or whatever in a good market condition, just all you're doing is just trying to make up for the loss that you incurred during the terrible trading conditions. So if you think about that logically, if you're able to be patient and sit tight and trade less during periods like this, then you can spend that 6 months or 8 months or whatever, when you get on that next nice new trend, you can spend that time increasing your account size instead of trying to make up for what you lost during the other periods. And so that's why I emphasize how important it is sometimes to recognize conditions that aren't highly probable, where you can kind of sit tight. As far as the direction alerts, you can see here, since we had the update on Monday, we backed off a little bit. We're a little bit more in the middle on the extreme range here. We backed off a little bit there. We're still in extreme, but and so that's, again, where we're kind of in this limbo state. We're still have a bearish risk right here, but we could grind higher, and this thing could still move to the right side of that extreme range. So, and that's the same with the breadth indicator. We're kind of right in the middle there on breadth. And sentiment's kind of backed up a little bit. We're right on that edge, on that border of extreme and high. On the buy-sell ratios, we saw it was getting close to getting a little bit of a switch over. Hold on here. I'm having some issues with the site. Some of you might be experiencing some of the same thing. Hold on here. Let's see if I can read into the site here. Here we go. All right. If we go to the buy sell ratios, we start to see. It looks like it looks like it crossed right here, but it didn't. The sells were coming up, and then they moved down. The buys were dropping, and then they started to move up again. Now this shows that you could see a little bit of a rally where that expands a little bit. The buys and start moving up. The sells start dropping. And then if we look at the sentiment, it's dipped down a little bit from that extreme range there. So, but we're still right by it. So it wouldn't take much of a move higher to push that right back to that extreme range. So again, just recognizing a little bit of those conditions. If we go to look at a couple charts, what's going on here? Darn it. Looks like it logged me out. There we go. If we take a look at the market, you can see here what I was talking about. We're moving higher today. You see a little bit of that bearish reversal candle yesterday, but then we charged higher today. We're still in that extreme range, but we're on the left side of it. So that's what I'm talking about. We're in a little bit of a limbo here where, yes, we could still continue to move higher, and that could move even more extreme. But, I mentioned last week that I was kind of waiting for a trigger. And that's always important to recognize in these types of conditions right now when you're in near these extreme ranges, that sometimes it's something comes out of nowhere, and it could be a news item that doesn't seem that bearish, but it can be a trigger that causes the selling, a reason for people to sell. Because a lot of times in these extreme conditions, people are maybe worried, they're wanting to sell, but because we grinded higher, they don't want to have that fear of missing out. So they don't want to get out too soon, but they're waiting for any reason to just be able to pull the trigger and sell. And sometimes it can, when they're in that type of condition, it could be something really minor, but it could be good enough to be that reason to sell. And that's what makes it dangerous. It can come out of nowhere, and the markets could drop sharply. Remember what I've always talked about, how markets fall a lot faster than they rise. So, you could have the market down 2 or 3% in a day or two. And that's the risk is holding on. In other words, you could wipe out this whole 3-week move in one day. It could be right down there in one day where you get one of those really big drops. Here's a big drop day right here where it wiped out that whole move higher, pretty much wiped it out at once. So that's the risk of these conditions here. But yeah, so we're sitting right there. The other indexes. Well, the Russell is still underperforming. The others are looking about the same. The Qs had a big reversal day yesterday too, and you can see what I was talking about with higher volume. We had this declining volume in the Nasdaq 100, and then you get a bearish reversal day on a spike and higher than average volume. That's usually a very bearish sign. Now, we have rebounded today, but we've rebounded on lighter volume again. It looks like it's going to be a lighter volume day. We'll see. We got a couple hours left still before the market closes, but it looks to be another light volume day where we're just barely moving higher here. So, sometimes what can happen is that could be a bearish reversal, but it's early. You have market attempts to push higher again. That's why predictions on bearish reversals and bullish reversals are so difficult, because sometimes they happen immediately, sometimes they happen a little bit later. Usually, though, that's why it's important to recognize the conditions you're in, and not get too caught up with trying to make an exact prediction of when it happens, because nobody can do that. The smartest people that have ever walked this earth have tried to be able to perfectly predict market behavior, and no one has ever been able to accomplish that. So, but if you recognize the conditions, and that's what we try to do in these updates, is to help you recognize the conditions, you can at least make decisions based on that. And it could be that that's just an early warning signal with everything else we've been looking at, and then it attempts to push higher, and then maybe you get that trigger, whatever that is. That trigger gives people the reason to sell, and you start to see that pullback there. The Russell, though, I told you, is still underperforming. Well, this looks like it's going to be a problem all afternoon here. Darn it. This might be a little bit more of a brief update just because the website keeps having some issues. Let's jump down to the Russell here. You can see it has a little bit of a bearish reversal. It opened a little bit higher with everything else, but it's trading lower. It looks to be closing lower than where it opened. I've talked about how this is looking like a kind of a bearish head and shoulders pattern with your neckline down here. With the markets, other indexes moving higher, this has just been drifting sideways. And like I said, it attempted to move up today, but then it looks like it's going to roll over. So these are all, that's a little bit concerning. Now, again, that could change, and suddenly you could have outperformance. Yesterday, actually, it was up when the Nasdaq 100 had that strong bearish reversal. The SPY had a little bit of that bearish reversal. It actually closed higher, although off of the highs of the day yesterday. It did fade a little bit in the close. So what that tells you, anytime you see mixed markets like that, when some of the indexes are up and some are down, it tells you there's just a rotation going on. Now, I think that's significant, and you need to understand that that's significant, that often that means that money is just moving around. There's not new money coming in. It is a reflection that the buying energy is low. When a trend is strong, what you have is buyers coming in, and there's new buyers coming in, and there's new money coming in. It doesn't necessarily have to be new buyers. It could be big institutional, and usually it is big institutional funds that have had money on the sidelines, and now they're putting it back in the market. Maybe they had it in bonds, and they're coming back into the market. But when you see that mixed condition, and usually it's with the NASDAQ and the S&P 500, because NASDAQ tends to be more tech related, and so you can kind of tell when money is coming out of tech and going into other sectors in the economy. But when you see that, it's telling you that money is just moving around. It's not it's coming out of tech stocks and going into industrials or something like that. Well, it's out of one area into the other. It's not the whole market isn't moving together. It's not like money is going into industrials and into tech, and that's a healthier condition. That's a healthier sign, is when money is going into all sectors, not necessarily equally, obviously, but when the majority of sectors are moving. You're going to have some sectors that are going to be down in an up day or up in a down day every day. But that's where when we talk about breadth, that's what we're talking about. Are there lots of sectors moving in the same direction? And usually in those mixed market conditions, you're getting a fracture of that. And that's usually kind of a little bit of a bearish sign, although it's not a strong bearish sign. Because sometimes you'll get these mixed markets and the market will charge forward. We had it happen a few weeks ago where we were getting mixed markets. We talked about how that was a little bit of a bearish signal, and yet the market continued to move higher. So, but that's kind of what I've been pointing out in the Russell, is that underperformance. Now, I also pointed out that usually in head and shoulders patterns, the left and right shoulder tend to terminate in the same area. That leaves some room to where maybe the Russell still rallies up a little bit further or goes up a little bit further, and maybe this is just an early warning sign of that weakness, and it shakes it off and tries to go higher again, just kind of like we saw in the Nasdaq 100. All right, so those are kind of the conditions we're in. Let's move into some specific stocks. And I'm going to have to, it's going to be a process all day long where I'm going to have to log back in. Usually you can just refresh the page in it, but or I don't have to log back in, but I have to pull up the site again. Let's go into some specific stocks though here and so let's go into retail. We're going to the hold section right here. By the way, the trading I'm going to do today, luckily, is going to be kind of brief, but I did find a free virtual trading platform that it's still a little on the basic side, but it'll work for those of you that want to kind of practice some of these orders or practice some trades. Now, normally we don't recommend doing a lot of virtual trading just because it's just never the same as real trading. There aren't real emotions involved, and so it's not great practice as it may seem. We usually recommend just trading with small amounts, buy one share of a company or something, especially with no commission trades now out there. It's easier to do that. But to have some skin in the game, even if it's just a very small amount, even if you're paying like $10 for the stock, or you have $10 of your money buying one share of the stock, and so you have $10. It's still a better practice than some of these virtual platforms. But if you're using it just to practice placing these order types as you're going to start trading real money, you can use it kind of for that purpose. And that's kind of what will be the training for today. All right. So I like under this, I like this Big Five BGFB under the retail sector. Now let's switch this over to signals here. This has recently been a buy signal. It's pulled back to hold again. I've liked this stock for a while. We've traded a few times during this run up. You've heard me mention it a few times. It's pulled back to sell a couple times here, but each time you can recognize you've had the higher low, the higher high. Now here it seems like we failed to go to a higher high, and we're kind of drifting a little bit sideways right here. Now this is not far from going back to a buy signal. We're right on the border there. Like I said, today or yesterday it went back to hold. So it wouldn't take much of a move up to get that confirmation, but you might want a little bit of extra confirmation on this because you're so close to it, and because of these conditions, these market conditions, is just wait for it to break out. So right around $17.80 there is the breakout. If you can get above that, if it can get above that, you could use this dip right here, because this is a little bit of a cup with handle formation. A little bit of a steep cup right there, but a little bit of a cup with handle formation. If you remember the rule of thumb on that, you can take the distance from the top of the cup to the bottom of the cup and project that upward. So if you do break out, there's a pretty high probability you could get at least that distance of a move. Not immediately necessarily, but eventually it can work its way up that way out of these breakouts. So that might be a little bit stronger confirmation to wait for that. But this has been a really good stock, and had a pretty good run there. All right, and then there, if we go under the construction sector. Here's another one that we've traded multiple times. It's come back to a hold. Is this HOV, 97 strength rank, and we've got a few signals on this one. The latest run was back in January. Went back to a buy signal, and it had this big run up right here. So a few times where it's gone back to hold. It's come back to hold again. You're still dealing with higher highs, higher lows. It has leveled off a little bit here. You can see the steepness of this move. If you kind of connect the tops, and then this latest top was a slightly higher high, but the trend looks to be kind of moving a little bit more sideways there. That's fine as long as it continues to have higher highs, higher lows. We don't know yet if this is a higher low because it needs to kind of move up off of that. That's an area to watch. If this thing goes back to a buy signal, that'd be a good entry point. You could wait for a breakout as well on this one and see if it breaks out to a higher high. If it does move up a little bit off of this, then that low will be significant because if it does reverse and drop below it, that would give you your first lower low. That could be an early warning sign of a trend reversal or a steeper pullback. This is also going to be significant down here. That was also a previous pullback low. So if you don't know what I'm doing here, if you go back in some of the earlier tradings, I talked about how stocks tend to stair step when you're in uptrends. And so each of these lows on the pullbacks are going to be important because if you break it, it could be that early warning. You have higher highs, higher lows. That's the behavior of an uptrend. And if you break that cycle, where you suddenly get a lower low, it could be an early warning sign of a trend reversal. What you would look for is on the next attempted rally, does it end up fading and giving you a lower high as well? And now you're acting like a downtrend. You have lower highs, lower lows. That's kind of what we'd be looking for here. We don't have it yet, but if it attempts to rally and then rolls over, you'd have a lower low. You'd also have a lower high at that point, and then you could be in that early stage of a downtrend. So that's really important especially in these market conditions right now where things are still grinding higher. We don't have any evidence of a market reversal. All we have are conditions of a market top, but we don't have the evidence yet of that it is acting like a downtrend. That's why you're in limbo. It's like it could keep going higher, but you don't want to short a market until it starts acting more like a downtrend. You'll get killed that way. Trying to short a market that's still grinding higher. So, but that's what I'd be looking for is that type of behavior. So that's a stock I like here in the construction sector. The next sector. Sorry, I have to keep logging in on this thing or pulling up the site again. If we go down to transportation right here, I like the one at the top, 97 strength rank. DAC is the ticker symbol. And again, nice strong uptrend. You're right at the support line of that uptrend. And you'd like that to hold. It could dip a little bit below the trend line there, but you'd like that to hold if at all possible. And if this thing can go back to a buy signal, you could also wait to see if it breaks out to a new high. It's a little bit of additional confirmation. But this has been a nice, strong uptrend, nice little stair step upward. And then under business services, this PMTS, 99 strength rank. But it seems to be kind of forming this kind of a bowl-shaped move right here. Needs to keep going higher though, because it's also possible that this is a move down for wave A. This kind of sideways move is wave B, and then you have one more move down for wave C. So that's something I would be, kind of cautious about looking for. But again, we're waiting for that confirmation to have it go back to a buy signal. Let's see how close that is. It's getting pretty close. Right here, not quite there yet. All right, so that gives you a few stocks to consider there. let's get into the training then. Um, I'm going to go back to, well, we could just use this right here, PMT, and obviously we'd be waiting for confirmation on these, but I can show you at least how to use some of these same stocks to place orders. Now the website I found is this. It's kind of a simple website. It says it's howthemarketworks.com. Up here at the top, you can see howthemarketworks.com. And it's a free login site or whatever, and you can have these different games, these different trading games. You can set up so if you got friends you want to compete against or something like that, you can set it up. It bases everything on market hours, so you can place orders at night, but they're not going to get filled until the market opens, which is a better virtual system. If you have one that'll get you into a trade at 12 o'clock at night, it's not very realistic at all. But I set it up last night. It's just real basic setup, create a username and login and all that kind of stuff. And if you go under make a trade right here, and it just does stocks, so it doesn't let you practice options. TD Ameritrade has an app called Thinkorswim that you can get. If you have a TD Ameritrade account, you can get into Thinkorswim. That has a really good virtual platform for options, but it's a really complex. I mean, when you pull that thing up, it's like stuff everywhere, and it's hard to kind of figure it out, which is why I'm not using it in a training, because you almost need a training on that to have a training. Training on how to use the platform before you can even have a training on how to place virtual trades. I would just recommend with options and stuff that you would, if you learn some of these basic order types and comfortable with them with stocks, they're pretty similar for options, and you just do really small trades, small orders on those just to practice. But if you click on make a trade, click on stocks and ETFs, we'll do a virtual trade here on PMTS. So if you click under the symbol right here, type in PMTS. Now, usually under action, they'll ask you want to buy or sell, or if you're going to short the stock, you're selling first. To cover means you would buy it back later to buy back those shares to cover your short position. We're just going to buy the shares. How many? And by the way, you can set it up to how much you want to have in there. I think I have 100,000 in this practice portfolio here, so we'll put in 100 shares. Now under type right here, and I understand for those of you that are sticking around for the training, I understand that some of this is very basic. You already know how to do this. You don't have to stick around if you already know how to place an order. I wouldn't want to waste your time. This is really geared towards just really beginning traders that may not know how to use some of the stuff. And the basic placing orders is like I said, really, really basic. But I'll show you how you can set up a stop, a trailing stop, those types of orders as well, that you can practice some of that if you haven't done that before. So 100 shares. Now, under order type, you can either make it a market order. Remember when I talked about these order types last week in the training, I said market orders, you don't want to place market orders. That'll get you in the trade immediately, but you're basically telling the market maker, charge me whatever you want for this thing. If the price moves at all, and it can move big, it can move up, and you can end up paying a lot more than you were planning on to buy that stock. So we want to use a limit order. And to place that limit order, we need to know what the current ask price is. Now, most of the time on most broker accounts, you can just click on the ask price, and it'll pull up the order form and fill all the stuff out for you. It'll assume that you want to buy. All you have to do is put in the amount, and it'll use that limit, that the ask price as your limit price. On this virtual platform, we're gonna have to put it in ourselves, so we'll just put in $16.50. And that's telling the broker I want to pay $16.50 or better. Anything lower than that, nothing higher than that. So if this thing moves up, it's not going to, it won't trigger my order. Now this is one, I don't know if I went over this in the training or not, but you can set these orders to be, this is set to be good for today only, meaning if this order doesn't get filled at the end of the day and the market closes, it'll just end. You could also, if I'm really a stickler for this price, and I want to get in, and I don't mind getting in tomorrow or the next day or whatever, I just want to make sure it's at this price or better. You could extend that order to what's called a good until canceled order, or good till canceled, or sometimes abbreviated GTC, good till canceled. That means that order is going to be in place until you go in and cancel it. So it could be in there a long time. Now, some brokers will put a limit on that to where it's like it'll be good for 90 days or something like that, for 3 months. Just so you don't have these orders that are out there for eternity, out there forever, where 5 years from now you're like, oh boy, I just got filled on an order I placed, 2 years ago or whatever. That would not be a good experience. So some brokers will put but it's usually down the road there. So these orders can be in place for a pretty long time. But that's what that means. Good until cancel. That order is good until you go in and cancel it. I don't like to place a lot of these types of orders, especially to buy something, or, because like I said, it could shock you. They're good for stops and trailing stops. We'll use it for a trailing stop. But, you don't want to have a bunch of these in place where you lose track of them. So we're going to go ahead and review the order, or preview the order there. And it just basically shows you what you're going to pay for it, and then place the order. And it says the order was placed successfully. If you want to follow it, you can go over to this My Portfolio tab right here and click on Open Positions. Let's see what the open positions are. All right, there it is right down there at the bottom. Now that we're in the trade, we got in at $16.50. And let's say I want to let this trend go as far as it wants to go. But I don't want to have to watch it every day. We could put a trailing stop on this. If we look at the chart again, I can pull up the chart. Here it is right here. You can see that, on some of these pullbacks, there's like a $3 or $4 move on the pullback. Here it moved down a couple dollars there. A lot of times if I'm going to set $1 trailing stop on an order, I like to go back and see how far, because the purpose of a trailing stop is you want the stock to go up as far as possible, but you also don't want to get bounced out on some of these minor pullbacks. You right here made this big move up, move sideways. I want to stay in the trade, even though it's moving sideways, because I want to get that big move when it breaks out. So I don't want to get bounced out of the trade. So what I'll take a look at is what is the range of some of these pullbacks? This was up here around $10, low down here at about a little over $6. So, if I put in a trailing stop at about $4, there's a good chance that'll keep me from getting bounced out on some of these little consolidation moves. So we're gonna put in and again, you can adjust that. Maybe you don't want to give it that much room. You don't mind getting bounced out at $2 or $1 even, and then you'll get back in again later on. There's all types of different strategies for trailing stops. We'll just put in a $4 trailing stop on this thing, so I can kind of put it on autopilot and forget about it. So what I'd do is I'd find the trade in my portfolio or in my account here. I'm going to go all the way to the right side and click on trade. And it is because I already bought it. It assumes I want to sell it, and this is a sell order. The trailing stop is a sell order. The actual order that goes to the floor will be a market order. Okay, so I'm going to leave that as a market order. I am going to put in what what type. Well, actually that's wrong on this. I need to select trailing stop on this one. But that is true that the actual order is going to be a market order. But trailing stop, I want to use a dollar amount on this. I want to make it a $4 trailing stop. So it's going to trail. That stop order is going to trail by $4. Now again, if it wasn't clear before, we bought it at $16.50. What that means is that our stop order is going to be starting out, once I place this, it's going to be starting out at $12.50 or $4 below that. Okay. If this stock goes up to $20, that stop order is going to move up to $16. It's always going to trail the highest price. The key is the highest price. It's always going to trail it by $4. So if it goes to $20 and it starts to come down, goes down to 18, this is going to stay at 16. It's not going to drop down. Otherwise, it's worthless. What good is it going to do? It's going to stay right there at 16. So if this thing keeps dropping and then it hits 16, it's going to trigger it, and it's going to get me out of the trade. Okay. Now, if it just went to 16, I'd still end up with a 50-cent loss because I got in at 16.50. So the idea is you really want this thing to kind of take off and go. You get up to $30. That trailing stop will move up along with it. It'll be at 26. And then if it moves down and triggers my stop at 26, well, I got it at 16. I have a profit there. Okay. If you're going to use a trailing stop, you have to understand you're never going to get out at the highest price. That's the whole point of it, is you're going to let it run, and when it's starting to reverse trend, it's going to get you out. You'll have your profit, but it won't be as much as it would have been at the top, obviously. But you're not always going to know where the top. You can't know where the top is all the time, and so you're not trying to. You're just trying to get that chunk out of the middle. And some of these are going to trigger at a loss when they hit, because your trend isn't going to continue higher. But the idea is you get a bunch of these going on, and you're on autopilot. You got all these things on autopilot. They're going to be triggering. Some are going to be triggering at profit. Some are going to be triggering at a loss. Some are going to be triggering at break even. And overall, the point is that you should be growing your account if you're picking good trends, and especially if you're using a trend service like Traders Pro. There's a reason why we're focusing on these 98 strength ranked stocks, is they're the most likely to continue in their trends and continue to move higher. So if you get that probability work in your favor, and then you set up a system like this to manage it, and kind of manage it without a lot of work, you can see how you can have a nice little system to grow your money with very little work. And the idea is that it's all focused on the probability, the high probabilities of these things working out. And you combine that with a little bit of market update knowledge of reading when the better times are to be entering in a lot of trades, and when it's to be less, have less money in the market, and you can really play all those probabilities perfectly, or near perfectly. All right, so we're going to put in the trailing stop order, and we want to trail by $4. And this is important. You're going to need to change that order term right here to good till canceled, because if you're going to have a trailing stop only good for the day, what good is that? It's not going to drop. You don't want it to drop $4 today, and get stopped out. That'd be terrible. So this will allow it to kind of stay in place for a while until it triggers it. Let it kind of move with that trend for a long period of time. And then go ahead and preview the order down here and confirm the order. And then when you go into my portfolio, look at the open positions. You've got that trailing stop attached to it. One of the other ones we looked at was Big Five. Let's do DAC. Let's do HOV. That was the construction one. So let's go to make a trade, stocks, HOV. We'll do 100 shares, or we can do 10 shares or whatever. I'm just going to do a market order just to get in this trade right away. I just told you not to do that, but because I want to show the percentage trailing stop, how to set that up. All right, let's look at our positions. So get into the trade, and then we're going to, here it is right here, HOV. Go to the far right side, click on trade. It's a sell order, 100 shares. We're going to select trailing stop percentage. And, like a common trailing stop percentage is like 5% or so. So if you prefer a dollar amount, you can do a dollar amount. If you prefer a percentage, you can use a percentage. Like I said, a real basic one is a 5% trailing stop or a 3% trailing stop. We'll just do 5%. Make sure you change that to good until canceled, not a day order. And then we'll place that one on there. And then the last one, we'll do just a basic stop order. So let's do make a trade. Let's do DAC. That was the transportation index one, DAC. We'll do 100 shares. And again, we'll just do a market order just to get in this one. Go under open positions. All right, so we got in at $51.66. Let's pull up that chart here. After I log back into or bring that site again. Sorry about that. Actually, it's at least we're able to have a class. Sometimes there'll be technical problems and I can't even do a class. So I guess I'll be glad that I can always do the class here. All right, let's pull up the chart. All right, so generally when I'm looking for a place to put a stop order, I like to use these previous lows. Now, if you really wanted a tight stop, you could use this previous low right here. There's a little bit of a pullback right here before it broke higher high, higher low right there. That's a pretty tight stop. I might be willing to have a little bit more risk. There's a little bit of resistance back here where it pulled back, and that same area of support right here where it pulled back to that same area before going higher. If it broke below that, then I definitely would feel like that the trend is actually going down, or that's a deeper correction, and I'd want to stop out of the trade. So let's just assume that's about $43 right there. So I'm going to put a stop order in at 43 on DAC. So it's currently at 51.57. So roughly a about an $8 risk, $8.50 risk, if it were to stop me out. So I'm going to find DAC right here, go all the way to the right side, click on trade. And that is a sell order. I want to make this just a regular stop order. Now you could also, so other order types will have stop limit. We don't usually use a stop limit. Remember I talked about that. The reason why I wouldn't use a stop limit is it will stop you out of it's a limit order. So it'd be that when you're selling, it'd be that price or higher or better, because that'd be a better price to be higher when you're selling. And there's that danger that your stop gets triggered, but your order doesn't get filled. Because the stop, right, we're placing right now, the stop is it's a trigger price is what we're setting up right here. What is our trigger price? It's going to be at $43. That means that when the stock gets to $43, it's going to trigger our stop, and our stop order is going to go to the floor as a market order to get out at whatever the current price is. Just get out. And that's usually what you want with a stop order, because because it can be falling quickly. You want to get out and get out as soon as possible in that situation. So anyway, that's what's going on. So we're going to set that price here at 43. Make sure you make that a good until canceled order, because it's got to be in effect for a little while. And then go ahead and place that, or preview it and then place the order. And that's it. So, I've done a few of them here. I've got a few trades in place, different types of orders on them. And again, like I said, that's all I would use this for, is just to practice. If you're really beginning and you want to get some just basic practice doing this before you risk any money. But ideally, you want to be doing some real trades, even if it's like buying one share or something like that, to practice, because it's a better practice. And you could make money while you're practicing too. You could lose money while you're practicing, but you wouldn't lose very much. And that's important when you're doing any trading. You always have to be willing to lose some money, because there's no trading system in the world, no person in the world that's going to be right all the time and have every trade work out. We're all human. That's what everybody wants that goes in the marketplace. Everyone wants every trade to work out. It's just not possible. And the problem is, and this gets into trading psychology, the problem is that you have to understand human nature. Every trade you get into, you believe is going to work out, or you would never put the money into the trade. Let me give you an example. If you were certain that you were buying XYZ stock at $50 and you were certain it's going to go down to $45 in the next few days, you're never going to get in. You're never going to go buy this stock for $50, right? You would never get into something that is going to go down. You say, well, I'd still be okay if it dropped. I'd buy more. Okay, that's fine, but when you're placing that order, you believe it's going to go higher. If you still think it's going to drop, you're still not going to place that order, because why buy it at 50 if you know it's going to go down to 45 in the next few days? Why not wait and buy it at 45, right? So you have to understand that about yourself, that every time you're placing that order, it's because you believe it's going to go up. The reality, though, we know, is that it's not always going to go up, okay? And you have to force yourself to look at that. It's not something that comes naturally. When I set up a trading plan on a stock, and we just did it on this one here, but let's go back and if I let's just use that example again at 50. If I buy, I'm going to buy a stock at $50. And the only reason why I'm going to buy it is because I believe it's going to go higher. But I see an area below it where if it dips below it, that's why I know I'm wrong. That was this area right down here. Here's where I know I'm wrong. I have to force myself to do that because it's not natural for me to assume I'm going to be wrong. I don't want to be wrong. Nobody wants to be wrong. But a good trader that sets up a plan identifies, okay, where do I know I'm wrong? It may not be right here. Maybe that's not where you know you're wrong. Maybe it's a moving average, or maybe it's when their earnings drop for the first time. Whatever your reason is for knowing you're wrong, you got to know what that is. And it can be different. It can be tons of different reasons, but you got to know what your reason is. It can't just be, I'll know I'm wrong when I know I'm wrong, because I promise you this thing's going to drop. If that thing dropped down $10 or $15, you can find a reason in your mind why it's going to go back up again, and it may not. And you're gonna fail at trading if that's your approach, because there's just no way. Because that's what every beginning trader operates. They don't have a plan, but they think they'll know when they'll recognize it when they recognize it. No, that's not the case. You got to know that before you go in the trade. That's why everyone you talk to anybody out there that's successful at trading, and what they tell you, you got to have a trading plan. You got to know what you're planning on doing, whether where or how you're going to stop for a loss, where or how you're going to take your profits. That profit could be a target area. You take the distance of the range, project it from the breakout point. It could be a trailing stop. It could be a sell signal is your reason to get out of the trade. But you got to know it. But let's say I get in at $50 and I know I'm wrong if that thing dropped down to 46. Then I got to know what that would mean if I have 100 shares of the stock, and if it drops down to 46, that would be a $4 loss or a $400 loss. I'd better be willing to lose $400. And if you right now, if that $400, if you were to walk out the door with $400 bills and let them blow away in the wind, if you can't do that, or if you can't accept that loss, then that's too much risk. I better be doing 50 shares. Maybe $200 is more what I can handle. Okay, then I better be doing 50 shares. Or I better have a tighter stop. I better have a stop at 48 or something. Okay. But in every trade, you better look at, if you get stopped out, how much of a loss is that going to be? And you better be okay with that dollar amount, because what I just get done saying, you're going to have losing trades. So you're going to have that $400 loss at some point, and it could be on multiple trades. Your first two trades you placed could be a $400 loss and a $400 loss. That's $800. If I'm going to do two trades, I better be prepared for an $800 loss. And if I can't handle that, or that would freak me out, or I'd be angry enough to punch a wall, that is too much risk. That's a recognition that is too much risk. And that is, I think that's the most important part of trading, is this part right here, accepting the risk. You say, well, what about your profit? Should you know where you're taking profit? Yeah, you should know about your target area. And sometimes you don't know what that profit's going to be, because it could be when it goes to a sell signal or something like that. But that's the easy part anyway. And that's what everyone focuses on, is how much they can make, right? And why do you do that? Because every trade you get into, you believe is going to work out, or you would never get the trade. So it's real easy to count your profits you're going to make and dream about how much money you're going to make on your trade. That comes naturally. What doesn't come naturally is accepting the risk. And yet, that is the most important part of the process. You've got to be able to and by the way, you master that, you get that down, you're gonna have fun trading. It's gonna be great, because I can get in. You take your emotion out of it now. You know, if I set up trades where if I lose, I'm going to lose $1, and if I win, I'm going to make $3. And you get into 5 trades, and all 5 trades lose money. They all get stopped out, and they lose money, and you lose $5. How many of you would be okay with that? How many of you would be disgusted and upset and frustrated because you just lost $5? Nobody. I better not be speaking to anybody in this class that can't handle a $5 loss total, because you have no business being in the markets, and you are extremely risk averse, and you need to go put your money in your savings account and take whatever 0.0025% your bank's going to give you, because you can't handle any sort of risk. Okay, but none of you would have a problem with that. Now, I'm not saying your trading system has to be that low, because obviously if you have absolutely no problem with that, you could probably take on a little bit more risk. I could probably increase the loss potential on some of these trades. Okay. But even if you kept it at that, if you kept all your risk at $1, and when you're right, you're making $3, you could be you could have only win on 20% of your trades. So you get into 100 trades, 80 of them are losses, and 20 of them are profitable. On your 80 losses, you're losing $1 or $80. I'd still assume that most of you could handle that as a loss. I would hope so, because you're going to have a lot of $100 losses in your trading career. But on your 20 wins, you're going to make $3. Actually, we'd have to bump that up to 70%. So it would be you're having 70 winning trades and 30 winning trades and 70 losing trades. So on the 70 losing trades, you lose $70. On the 30 winning trades, you're making $3 or $90. So out of every 100 trades, you're making $90 on your winners. You're losing $70 on your losers. You're making $20 overall. And the way I always look at it is your winning trades. If you look at it as like running a business, your winning trades are your revenue. Your losing trades are your expenses. And as long as you're bringing in more money than you're losing, you have a profitable business, even if you only have a 30% winning percentage. And if you have a trading system like Traders Pro that puts you in touch with stocks that have a high probability of going higher, you should be able to have higher than a 30% winning percentage, at least you would think. Okay, but it doesn't mean that every trade is going to work out. Anyway, I didn't mean to necessarily go into all that, but at least that makes it a little bit more worthwhile if the order types were a little bit too basic for you. Getting into a little bit of the trading psychology. Maybe I'll repeat that as a full trading down the road where we get into a little bit more detail, but at least kind of go over some of the concepts there of making sure you accept your risk. All right, thanks everyone. Have a great week. We'll see you next Tuesday. We're back on our normal schedule again. See you next Tuesday for the market update. Have a good weekend, everyone. Bye now.